Rates are down almost 1% in the last month. Hey, it's Eric Osses here from Homebridge Financial Home Mortgage with my weekly update on mortgage rates for the week ending December 9th, 2022. Well, mortgage rates were in a holding pattern this week, but that's actually great news and further evidence that rates may have peaked and are starting to march lower. The biggest news this week was the Producer Price Index, PPI, for November. It's a leading economic indicator which measures the cost of wholesale goods and components that manufacturers buy. PPI dropped to 7.4% from 8.1% year over year. And the core rate, which excludes the volatile food and energy prices, was down 6.2% from 6.7% last month. The PPI numbers came in slightly higher than anticipated, but not enough to take mortgage rates higher. Bonds are in a holding pattern. They're waiting for much anticipated November CPI numbers, Consumer Price Index inflation statistics, that will be coming out next Tuesday. Also, the Federal Open Market Committee, the Fed big body that increases rates, will be meeting next Tuesday and Wednesday. On Wednesday, we do expect them to announce a 0.5% hike to short-term interest rates. Don't worry though, that's expected. It's already been cooked into today's rates. If Tuesday's CPI numbers are friendly, this may be one of the last Fed hikes that we see. Fingers crossed. For the week, rates were largely flat from last week, but my gosh, they're down almost a full percent in the last 30 days. Here are the national averages. Conventional 30-year fixed rate mortgage, 6.32%. That's down 0.89% in the last 30 days. 15-year fixed rates, 5.74%, down 0.81 in the last 30 days. FHA and VA 30-year fixed rate loans, 5.82%. That's down 0.93% in the last 30 days. And 30-year fixed rate jumbos, 5.72%. Those are down about 0.6% in the last 30 days. In other news, what if you don't fit into the box? In 2010, the Dodd-Frank Act legislation was passed, which implemented really vault-like underwriting standards for mortgage loans, including ATR, the ability to repay. Ability to repay under ATR, lenders have to prove your ability to repay the loan, which is why we frequently ask for additional conditions, documents, letters of explanation for all sorts of things during the loan approval process. Loans that fit into the box are called QM. Those are called qualified mortgages. That's important to a lender because that means we can sell them to the GSEs, government-sponsored entities such as Fannie Mae, Freddie Mac, Ginnie Mae, which includes FHA loans, VA loans, and USDA loans. But many borrowers don't fit into that rigid QM box for various reasons. Self-employed, gig economy, retirees with low income but high assets, investors, and even marijuana industry workers. It doesn't mean that these borrowers are necessarily a bad risk, but they just can't be underwritten in the traditional manner. For these borrowers, we do have options available called non-QM loans. A non-QM loan uses alternative underwriting methods. Approval can be based on a borrower's assets, bank deposit activity, cash flow from an investment property, high credit scores, large down payment, or even hefty cash reserves. I've helped many borrowers using a QM loan who were turned down elsewhere because they didn't meet the traditional underwriting guidelines. But we just had to look at their overall risk profile a bit differently to see if we could fit them into one of these programs. Homebridge has multiple non-QM loan options available. It's a niche type of a lending activity. It's very specialized and it's not offered by every lender. If you've been told that you don't fit into the box, reach out and let's take a look. We'll see if we can look at your individual situation and see if we can approve you outside of the box. That's all I've got for this week. I hope this information is super helpful. Be sure to reach out if I can answer questions. You can call me 206-915-3742. That's 206-915-ERIC. You can email me, eric@ericismybanker.com. Be sure to subscribe to my YouTube channel. or look for me on social media. Just look for Eric is my banker. Hope you have a great weekend, and I'll talk to you next week.